Hello students, good morning and welcome back to the online class. So in the previous class we completed illustration number 4, so that we'll continue with the illustration number 5 in this class. Okay, so please take down this problem. Okay, so Prajwal of Udupi consigned 200 units of product Q to Pranit of Delhi at an invoice price of for 60,000. See here. So Prajwal of Udupi consigned goods means Prajwal is the consigner, Pranit is the consignee. Okay. So consigner, that is Prajwal from Delhi, and consignee Pranit of consigner Prajwal of Udupi and consignee Pranit of Delhi at an invoice price of 60,000 after adding 20% of loading on cost price. Now, so there's two important points. That is one, 60,000 is an invoice price after adding 20%. Okay, this is very important. After adding. Okay, means in 60,000 20% it is already added, and on what they've added? On cost price. On what is very important when you calculate the value. Okay, so the two major point in that sentence is one, 60,000 is inclusive of 20%. Andre 60,000 alle 20% already add agide, and on what they calculated? On cost price. That is the first point. So now invoice price is taken to value the closing stock, but if there is any abnormal loss, then you have to value on the basis of cost price, right? So you have to calculate cost price. They have given the invoice price. See, in the previous problems, like problem number 3 and 4, the goods were considered cost itself, so we didn't have any problem with the invoice cost and the figures, right? But in this problem, he consigned the goods along with the load price. That is, he added some profit, but we call it as a load. Okay, it's not a profit, we call it as a load. He added some extra on the cost, then he consigned to Pranit. So you have to calculate what is the cost price. So 60,000, that is an invoice price. It is an inclusive of 20%, means it is already 20% added to that. You have to calculate what is the cost price. Why we calculate cost price? To calculate the value of abnormal loss, because abnormal loss is the abnormal loss is valued at cost price. Okay, next. Prajwal paid 25,000 on freight and insurance. So this is a non-recurring expense of consignor. Prajwal is a consignor. 10 units were lost in transit. So this is abnormal loss. And you see, just if you want to underline this word, okay, lost in transit. So lost in transit means the value, when you calculate the value of abnormal loss, you have to take the non-recurring expenses of consignor only, because it is lost in transit. Consignee yet to receive the goods. He didn't receive the goods, okay, but before he received the goods has been lost. So it is the consignor who has to bear the loss, not the consignee. So when you take the non-recurring expense, you have to take the proportion of only consignor. Insurance company paid the compensation of 24,000. This you have to take in the abnormal loss account. You receive the money. Pranit received the remaining stock. Okay, so out of 200, he received 10% was lost. 10 units were lost. He received 190. He incurred 80,000 for transportation. Now transportation is a non-recurring. Before before the gate, the goods have to come. You have to bring the goods from the certain places. You have to go for the transportation. So gate ಗೆ enter ಆಗ್ಲಿಲ್ಲ goods, so it is non recurring. 4,000 go down rate is a recurring, because go down rate, after dispatching the goods, after assembling the goods, you will incur that go down rate. So it is a recurring. Go down rent ಯಾವಾಗ ಕೊಡೋದಂದ್ರೆ ಅದನ್ನ go down ಅನ್ನು ನೀವು ಯೂಸ್ ಮಾಡುವಾಗ, when you use the go down, you will pay the rent. So when you use the go down after assembling the goods, right? Goods and assemble ಮಾಡ್ಲಿಕ್ಕೆ go down ಇರುದು, means after gate. So it is a recurring. He sold 160 units at rupees 520 per unit, partially on cash and partially on creditor. We don't know what is the creditor and what is the cash value, but we take it as a sale. He also reported an ordinary commission of 8% on sales. See here, ordinary commission of 8% on sale and del credit commission of 1% on sale. So again, in this point, you have to keep it in mind. It is and. So 8% ordinary is separate, 1% del credit is separate. So 8%, 1% different commission. Sometimes they give ordinary commission of 8% on sales, including del credit commission of 1%. In the sense, 8% include 1%. In that case, you have to take ordinary commission as 7%, 1% and del credit. But in this problem, ordinary commission 8% and del credit, and in the sense it is separate. 8% is separate and 1% is separate. So ordinary commission 8%, del credit commission 1%. He also reported that there was a bad debt of 3,000. Now who has to bear the bad debt? When you are providing the consignee the del credit commission, that is a special commission, the consignee has to bear the bad debt. So when you prepare commission account, you have to take this 3,000. If you want, you see the format. Okay, you open the format and you see the format. In commission, there is one bad debt entry on the debit side. So bad debt when it occurs, when the consignor pays the del credit commission to consignee. In that case, it's the duty of the consignor to bear the bad debt commission. Okay, so you have to prepare necessary ledger account in the books of parties. So which are the two main working notes you have to prepare? If there is abnormal loss, the first thing you have to open the abnormal loss, or you have to calculate the abnormal loss value, as well as you have to calculate the value of closing stock, that is also known as consignment stock. But in this problem, they have given the invoice price and they have not given the cost price, so you have to calculate cost price first. Okay, so write calculation of cost per unit. We want cost per unit. So next to write invoice, cost and load. Load in the sense it is profit. Now see here, it is 20% on cost. So cost is 100. So on what? See here, loading on cost. On what is always 100. So 20% on cost. So cost is 100. If you add, you will get the invoice price. So invoice price 120. Invoice 120, cost 100, load 20. Next to fill the information, you know what is the invoice price, that is 60,000. You want what is cost. So 60,000, that is invoice price. Then what is my cost? If you do the cross multiplication, you will get the total cost price. Total cost price, not the invoice, not the per unit. It is total cost price. So that is 60,000 into 100 divided by 120. You will get rupees 50,000. So now 50,000 is the cost price, 60,000 is the invoice price. Okay, next we have to calculate our cost per unit. So how to calculate cost per unit? So it is cost per means divide, unit means number of units. So cost 50,000, per means you have to divide by units. So units 200. So that is cost per unit is equals to cost divided by unit. Cost 50,000, units 200, it comes to 250. Okay, so you got what is cost per unit. Now if you want, you can calculate what is invoice price per unit. 60,000 divided by 200, you will get 300. Okay, see 60,000 divided by 200, you will get 300. See, my cost is 250 and the invoice price per unit 300. So the difference 50 rupees, the difference what you get, that is load price. This is load price. Okay, so you got the cost, and if you want, you can take down this the invoice price per unit. Then you got what is load price. Okay, next we will go for the next working note, that is calculation of abnormal loss. That is working note number 2, calculation of abnormal loss. Draw the lines, that is particulars, amount, sorry, units and amount in rupees. First you have to take the cost price. Okay, when you are calculating the value of abnormal loss, the value of abnormal loss is valued at cost price. So cost of goods lost. So 10 units, that is cost of goods lost. Here 10 units were lost, and the cost of 1 unit, that is 250. Just now we calculated. You see the working note number 1. So if you multiply, you will get 2,500. Now what next? You have to add the proportionate non-recurring expenses, because the consignor as well as consignee, if you incur non-recurring expenses, then he will incur on the total units. But abnormal loss, it is not the total units, it is some units, some percentage of units. Now it is only 10. So whenever you take the non-recurring expense of consignor, you have to take only the proportionate, means how much for 10 units. The what expenses you incur, it is for 200 units. You want only for 10 units. Okay, so right, add proportionate non-recurring expense of consignor. How to find? It is a cross multiplication. See there, consignor ka entire expense is non-recurring, that is 25,000. He incurred 25,000. That is for total units. Total units in the sense 200 units. But we want it for only 10 units because abnormal loss is only 10. Then what is the value? Cross multiplication. 25,000 into 10 divided by 200. It comes to 1,250. Okay, what next? That is proportionate non-recurring expense of consignor. Now the goods has been lost in transit, so we cannot tell my consignee, the consignor cannot tell the consignee to bear the loss, that is proportionate loss, because it is lost in transit, the goods not yet reached the consignee, so it is nil. So it is nil. Proportionate non-recurring expense of consignee nil. If you do the total, you will get the abnormal loss. The abnormal loss is 10 units, that is the value of 3,750. Okay, next one, that is we have to calculate the value of closing stock. Now which format we have to use? So I gave two format, when there is an abnormal loss, when there is abnormal loss. See whether there is a normal loss, whether the problem states there any normal loss, whether they are given any normal loss in the problem, no. So when there is no normal loss, which format you have to use? The format similar to abnormal loss format. You see the format. So draw the lines. Calculation of value of consignment stock, that is closing stock, when there is no normal loss. When there is no normal loss, you have to take only the proportionate and not the total. Okay, first you take the cost. So when I use the word cost, if you're calculating for the closing stock, then that is an invoice price. If you get confused, you can write the invoice price. Okay. If you get confused with the cost of goods sold, you can write invoice price of goods unsold. Okay? Invoice price of goods unsold. But you have to take after adding the load price. Now, how you got this figure? That is units. The total units consigned 200, out of which 10 units were lost in transit. Means the consignor received only 190. Out of 190, he sold 60 units. See, 160 units is sold. So remaining 30 units. So that is the units column. I repeat, 200 units consigned by the consignor, but when it was moving in transit, it lost 10 units. Means the consignor received only 190 units. Okay, he received only 190 units. Out of 190, consignor sold 160 units. So the left out stock is 30 units. Now what is the price? There are two ways to calculate the value. One, directly you can take 300. How you got 300? 60,000 divided by 200 units, then you will get 300. So either 30 into 300 you will get 9,000, or 30 into 250 you will get 7,500. On that you add 20%. Okay, 7,500 plus 20% you will get 9,000. So two ways you can calculate the value. Either you directly multiply by 300, that is 60,000 divided by 200 units, or you just multiply by cost, then you can add the invoice price, that is load price of 20%. Okay, next, that is proportionate non-recurring expense. Okay, this format when you have to use only when there is no normal loss, otherwise you have to use the other format, the first format, okay, which was we solving from the previous classes. Again, the cross multiplication. Proportionate means you have to do the cross multiplication. 25,000, that is for 200 units. We want it for only 30 units because my closing stock is 30. Cross multiplication, 25,000 into 30 divided by 200. 25,000 into 30 divided by 200, it comes to 3,750. But when we calculate the closing stock, you have to take the proportionate non-recurring expense of consignee. Okay, sorry, a consignee. You'd make it consignee. It is not consignor, it is consignee. Here it is consignee. Same way. Only one non-recurring expenses that is incurred by consignee, that is 8,000. Transportation. Go down is a recurring, so only you have to take 8,000. So 8,000, that is for 200 units, and you want it for 30 units. So 8,000 into 30 divided by 200. So it comes to 1,200. If you add, you will get the total value of consignment stock, that is closing stock. So after this, we'll prepare the ledger accounts. Draw the lines for ledger accounts. In the books of Prajwal, that is consigner, you have to prepare consignment account. So you have to start with the goods consigned. See the first line, that is Prajwal of Udupi consigned 200 units to Delhi, Pranith of Delhi. So it is 2 goods sent on consignment. Okay. So in this problem, we are having load price. So whenever you write the units, okay, where units in the sense goods, so you have to write the, you have to pass the another entry that is on the load price. Now when it is 2 goods sent on consignment, this 60,000 include load price. So we want the net value. So you have to write on the credit side, buy goods sent on consignment account. Okay, whenever you write the goods sent on consignment or any entries that is relating to goods, the next entry should be, that is the cancellation of cost, load price. So on the opposite side, the same entry. If it is goods sent on consignment, goods sent on consignment. If it is consignment stock, that is closing stock, so it is consignment stock reserve. We are creating the reserve out of stock. Okay, so here it is, to buy goods sent on consignment. How you got the figure? 200 is the units. On that cost price is 250. It will comes to, it will come to 50,000 on that 20%. On that 20%, not adding, you're multiplying. You're calculating only the load price. Or you can do it as the other way. That is 200 into 50. You can multiply by 50. How you got 50? See the working note number 1. When I was when we got the cost price per unit, I told you that you can calculate invoice price per unit also. That is 60,000 divided by 200. You will get 300. So the difference 50 rupees is nothing but load price. So you can multiply 200 by 50 or 200 into 250. The what figure you get on that 20%. Or the another way, you got to the total cost 50,000. You see the difference, 60,000 is the invoice price, 50,000 is the cost price. If you find the difference, you will get 10,000. Okay, next sentence, that is Prajwal paid 25,000 for freight and insurance. So when the consignor pays, the entry will be to bank account. So after that 10%, 10 units were lost in transit. What is the entry? Abnormal loss on the credit side. By abnormal loss. That is working note number 2. You see the working note number 2. Next, insurance company paid the compensation 2,400 that we have to take in the abnormal loss account. Next, E incurred. Who incurred? Pranith received the goods and he incurred 8,000 for transportation and 4,000. So you have to mention his name, the consignee's name. So it is to Pranith account, that is expenses like transportation and go down. So you have to write the total value. Okay, what next? Sale. So Pranith has sold the goods, right? In consignee will sell the goods, so you have to write consignee's name. That is by Pranith's account, sales 160 units were sold at 520. It comes to 83,200. Okay, next that is commission. So right, to Pranith's account, that is commission. Now we have two commission. One that is ordinary commission. The ordinary commission that is on sales. See here it is on sales, on sales. So my total sale is 83,200. On that 8% it comes to 6656, 6,656. And one more commission, Del Crader. So 83,200 into 1% it comes to 832. So my total commission is 7488. So after that bad debt, so bad debt we have to take in the commission account. So now we find the balancing figure, that is, sorry, before finding the balancing figure you have to record the closing stock, right? So right, by consignment stock, that is working note number 3. So again on this consignment stock you see the value, you took the invoice price, in the sense you have added the load, right? Load price, you took the invoice price, in the sense you added the load price. Now we have to remove. How to remove? So on the debit side, now because the closing stock, consignment stock, we recorded on the debit side, sorry, credit side, the load price we have to remove by entering on the debit side. What is the journal entry? Here it is consignment stock. When you when you deduct the load price, in the sense you keep it as a reserve. So it is to consignment stock reserve account, same name, but the reserve account you have to write. In first case, that is goods and on consignment, you have to remove entire amount by crediting the same entry by goods and on consignment account. But in the case of stock, you have to keep it as a reserve. So it is to consignment stock reserve account. So how to calculate? So you can directly multiply 30 into 50. 50 is the load price, that is the difference, that comes to 1,500, or 30 into 250, you will get 7,500. 7,500 is the cost. 7,500 is the cost. On that 20%, 1,500. On that, you are not adding, you are multiplying. So the balancing figure is transferred to profit and loss account. You will get the total of 1,10,900 and the difference of 4,912. So if you complete it, you draw the lines for next account. So next account, that is consignee's account, Pranith's account. Okay, first you have to transfer the figures balance from consignment account. The first one to consignment account, that is sales. So I think consignment account you are very familiar because you solved 3 problems on that. This is the third problem. The next on the debit side, you see the consignment account debit side, you have twice your debited consignee's account, means you have to twice you have to credit the consignment account on in the consignees. The first one, that is by consignment, that is expenses, and the second one is, that is total commission. So in this problem, there is no bill drawn on consignee, so bills receivable entry will not come. So the balancing figure transferred to bank account. Balancing figure bank, you have to pay the money by bank account. The net amount, the 83,200, and the net figure you get 63,712, that you have to pay it to the consignor. So the entry is bank account debit to Pranit. So if you're done, you draw the lines for abnormal loss account. Draw the lines for abnormal loss account. So first entry from consignment. So consignment credit side you have written abnormal loss. In abnormal loss debit side to consignment. To consignment account 3,750. So you have received the money from insurance company. The insurance company admitted the claim, right? So when you receive, it is by bank. By bank 2,400. You see the problem? The insurance company claimed 2,400. The difference transferred to P&L account. The total 3,750. Difference 1,350. Okay, next to draw the lines for goods sent on consignment account. So these are the four major ledger accounts you have to prepare in the books of consignor. So we have two entries on the in consignment account that is relating to goods sent on consignment. So you have to record both the entries in the current ledger account. First by consignment 60,000. Next to consignment 10,000. That is the load price. So the net cost, that is the difference, is transferred to trading account. Total 60,000. Difference 50,000. So if you done, next you draw the lines for the ledger accounts that is prepared under consignee book. In the books of Pranit, that is consignee, you have to prepare consignor's account, that is Prajwal account. So first, that the consignor is going to receive the sale money, that is by bank account, but you have to pay expenses to consignee as well as commission to consignee. So after paying the what figure, the net figure that you get, that he has to receive from Pranit, that is 63,712. So next last ledger account, that is commission account. So first entry in the commission account, that is from consignor. So by Prajwal account 7488. So in this problem there is a del creditor commission. So the consignee has to bear the bad debts figure, bad debts amount. So it is two bad debts, 3,000. So bad debt means irrecoverable money. So the difference is transferred to P&L account. Coin. So the difference 4,488. Okay. So this is the end of illustration number 5. So remaining we'll see in the next class. Okay. Thank you.